Is the next trading opportunity for Bitcoin around the corner? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. After completing KYC and depositing 100 USD, you will receive Bitcoin contract positions worth $1,000. You will receive $100 worth of Bitcoin contract positions upon completing the KYC verification process and depositing $100. This promotion is truly advantageous. Now, let's analyze the current market situation. We can actually use the free positions obtained from the promotion to participate in this trade. Let's take a look. Currently, the market has tested the vicinity of this trend line. It has reached the lower edge of the trend line. Let's take a look. You can look at the previous two touchpoints here. Let's take a look. This trend line is definitely valid due to these three touchpoints. What we are waiting for now is a significant downside breakout in a larger time frame, indicating the beginning of a bearish opportunity. So, what are we missing at the moment? A significant drop. What does it mean? Let's take a look. In fact, the current market is experiencing a slow depletion of the bullish trend. You can observe the gradually diminishing volume in this upward wave and the subsequent wave. It has been shrinking until now. In other words, although the bullish momentum has gradually faded, the bearish side has not demonstrated significant volume strength yet. I believe we are waiting for an opportunity where the price breaks below this level. With a substantial increase in volume, the volume needs to be visibly higher and easily noticeable in order to say that the market has a good chance of initiating a decent bearish trend. A similar situation occurred last time. Let's review what happened in 2019. At that time, it also had a significant oscillation phase at the region above. Initially, as the market was rising, the volume increased, which is a healthier condition. Then, after the oscillation phase, the volume gradually started to shrink, reaching extremely low levels. And that's when the downtrend began. The volume surged during the downtrend. It was at the point when the volume surged that we confirmed the reversal of the entire bullish market and proceeded with the oscillation and subsequent downtrend, which was more favorable for the bearish side. In the current situation, we are in a similar position, but whether we can experience the same conditions remains to be seen. In trading, the best approach is to follow a smooth trend, whether it's an uptrend or a downtrend. For example, it's very suitable to trade contracts for this trend. This segment of trend, 2. This segment, and this segment, 2. Trading contracts in these segments is a good option. Is it suitable for trading contracts in this upward price movement? Not really, because it was an oscillating upward trajectory. Holding contracts during such oscillations can indeed be challenging. On the other hand, if we encounter a smooth downtrend, it's an excellent opportunity that we should seize. In trading, we aim for smooth downtrends or uptrends. I believe we have a good chance of experiencing a smooth downtrend soon. Although the previous segment was a downtrend, it had a trend. It was not ideal for trading due to its oscillations of large magnitude. Moreover, time is gradually running out. I think we have a high possibility of entering a new trend by the end of this month or the beginning of next month. If we observe the boundaries of these two trend lines, we can estimate that the outcome will be determined around the end of this month or the beginning of next month. All right. Currently, I believe this trend line should not be broken. If it is, we would have to wait for the next drop, which would take some time. However, based on the current situation, I think there is a good chance. Let's zoom into a smaller time frame, such as 4 hours. Looking at the 4-hour time frame, the price is currently running along the trend line, and there is a high possibility of a downside breakout. And yesterday, those who were watching closely would have noticed significant shakeout activity. It's a significant whipsaw. After dropping, the price bounced back up to shake off those traders, and then resumed its downward movement. It means the price remained the same, but the positions were liquidated. In such a strong shakeout scenario, it might be worth considering reducing position size and setting the stop-loss level further. For example, we can place the stop-loss level somewhere here. Of course, placing it here is a bit exaggerated, However, if we were trading this trend and we might see a target of around 18,000 US dollars. Placing the stop loss at that level would still be acceptable. Considering the risk-to-reward ratio, trading in a volatile and whipsaw market can be challenging. Alright, let's switch to the 4-hour time frame. In the 4-hour time frame, we can see that this decline occurred during after hours. Moreover, the market has broken below an important support level. If the market were to reclaim this support level, I believe that in the short term, there could be a strong upward movement. It might be a good idea to exit the short positions on this downward movement, as it will likely take some time before it drops further. If the price returns to the range of 26,600 US dollars to 26,700 US dollars. Coincidentally, the CME gap is also located in the range of 26,500 US dollars. Let's take a look. This is the CME chart. When we switch to the 4-hour time frame, we can observe that the closing price last week was around 26,500 US dollars. Currently, there is a considerable distance between this price and the current price, around 1,000 US dollars. If it's filled, it's roughly a 1,000 US dollars rebound. Therefore, if I were to enter short positions, I would reduce the position size compared to normal circumstances, because there is a possibility that the price might go up and fill the gap. For example, if we stay at this level and wait until Monday, the current price would be around this point, and it would create a significant gap. Such gaps often have a high probability of being filled. Hence, individuals holding short positions must be cautious of this potential risk. Lastly, let's take a look at Bitcoin dominance. Those who have been monitoring the market recently might have noticed that altcoins have experienced a significant drop. Let's examine some tokens I have selected on Binance. Okay, these tokens have all experienced a severe decline recently. Cardano, for instance, has reached a new low during this bear market, which is quite extreme. Similarly, Chainlink and Binance Coin have also witnessed a substantial and rapid decline. Dogecoin has also suffered greatly. Therefore, during this downturn, altcoins have experienced more significant declines compared to Bitcoin, which has been relatively stable. Under these circumstances, Bitcoin dominance tends to rise. And if everyone has been paying attention to the recent market trends, you may have noticed that this current bull market is primarily driven by Bitcoin's rise, while altcoins have seen moderate gains. However, during the market downturn, altcoins tend to experience significant declines, while Bitcoin remains relatively stable. Therefore, based on the current market conditions, if you are looking to buy spots or engage in spot trading, Bitcoin is definitely a more suitable choice compared to altcoins, because Bitcoin demonstrates greater resilience during upward movements with substantial gains, and it tends to withstand downward pressure better than altcoins. This dynamic contributes to the continuous rise of Bitcoin dominance. As you can see, from September to November, during this wave of upward movement, Bitcoin dominance has been consistently climbing. This is not a coincidence but a recurring pattern we have observed in previous cycles. Let's take a look. During a small bull market, Bitcoin tends to rise continuously, correcting the market, which indicates that holding Bitcoin is the best option. When I did bottom fishing, I focused on Bitcoin. Well, this trend will continue until we experience a true bull market. At that point, we may witness significant declines in Bitcoin dominance, which is primarily due to the rise of many altcoins attempting to capture Bitcoin's market share. Many people speculate on altcoins during such periods, but now is not the best timing. The best time to trade altcoins is during the peak of the bull market, which will likely occur sometime after the 2024 halving event. Trading altcoins during a bull market is the best choice. Lastly, let's examine some data. I've noticed that if we observe the holdings of Binance Coin on the Binance exchange, we can see that some individuals were accumulating before the price decline. This period is before the price crash. Let's thicken the line and change it to white. During the oscillation before the drop, the open interest increased, indicating that some individuals were aware of the impending price drop and positioned themselves accordingly. Even during the price crash, the open interest continued to increase linearly, with only minor reductions. It was only after the final wave of the downturn that the holdings decreased. This certainly indicates the presence of whales, who accurately predicted the trend and movement of this market. So, this information can provide some insights, or suggest that someone might have insider information regarding potential issues with Binance or altcoins, prompting them to take preemptive measures in trading. Alright. Thank you. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.